GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the only thing stuck in the past is your hardware wallet with that token you swore would come back. I'm your host, Jay Hamilton. It's Wednesday, May the 7th. Bitcoin is at 97K and continues to hold very strong given the market uncertainty. Last week, Michael Saylor brought out his big kahunas and said he was going to buy another 84 billion of Bitcoin, assuming he can raise that, which seems very likely at this point. Bitcoin treasury strategy is clearly picking up a lot of steam. What does this all mean for Bitcoin in the short term, in the long term? We have today with us Matt Crosby, the lead analyst at Bitcoin Magazine Pro. We're going to talk about his take and his predictions on Bitcoin, where we're at right now, where he sees in the cycle. We're going to look at some interesting ETF numbers. We're going to bring up a bunch of charts because we all know that Matt is one of the best at Bitcoin charts. We're going to look at MicroStrategy as well. What are Matt's thoughts on MicroStrategy? We're going to have a Q&A at the end of the show. So throughout the show, if you guys have any questions, hit us up on Twitter, on YouTube, wherever you are watching. Feel free to throw your questions in the chat. Before we jump in, if you guys are going to be at Consensus next week or Permissionless in June, the Milk Road team is going to be at both, myself included. Hit the link in the show notes. We have events happening at both. Free beer, chance to hang out with lots of friends. Check that out. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. With that, Matt, welcome back to the Milk Road Show.
Thanks for having me. It's a pleasure to be back, and great introduction, although you put some pressure on saying I'm one of the best, so really have to live up to expectations today.
You can do it. It's easy for you, man. This is all you do every day, so I know you got what it takes. I know you got what it takes. Nobody spends as much time in the Bitcoin charts as you, so
it's true. I'm a true data nerd.
Yeah, exactly. Okay, let's just, before we jump into the charts, let's just get your current take on the market. How are you framing the market right now? What are you paying attention to?
So to be honest, I'm pretty impressed with Bitcoin at the minute. Obviously, we had the 30-ish% retracement from all-time highs to around $73,000, $74,000-ish. And obviously, that doesn't feel great at the time. But Bitcoin's strength throughout that downwards move was incredibly impressive. We were seeing pretty much all of the Mag 7 stocks and equity indexes dropping actually more than BTC, which really outlines the strength and confidence that a lot of investors are actually having in the Bitcoin market right now. And obviously, we've had a pretty explosive rebound to around $97,000 where we are now. To be honest, I do think after a pretty explosive move, it wouldn't surprise me to now have a little bit of consolidation, especially as we've regained that kind of 90 to 100K range that we were chopping in for a few weeks, a couple of months, if not just at the start of the year. So ultimately, I think things look good. I think from a macroeconomic perspective, things are starting to transition. We're getting a little bit more certainty in the market. Of course, there's still the risk of more tariff wars, and who knows what else is going to be thrown into the works and just, blow everything up and make everything a little bit more difficult than we'd like it to be. But ultimately, I'm pretty bullish on Bitcoin. I usually am pretty bullish on Bitcoin, but I think right now we're actually primed to have a fairly positive next few months and potentially a rest of 2025 for Bitcoin.
Yeah, the headline risk right now on the macro side is obvious, and who knows what will happen there. And that's definitely something to be aware of. We've had so many shows recently where it feels like all everyone is talking about right now is Bitcoin. It's in the crypto market. It's like everybody's forgot about the rest of crypto. And for a good reason. We are more in a risk-off environment. Bitcoin should be a risk-off asset eventually. It doesn't necessarily trade like one all the time right now, but it partially does. And we've had a lot of guests, really perma-bulling Bitcoin. Predictions. If we had Adam back on the show, you're predicting 500,000 to 1 million Bitcoin in this cycle. Sam Samao on the show, same thing, and the list goes on. Before, I don't want to jump into your predictions right away and where you think we're going to go in the cycle. We can get there towards the end. First, I want to look at some charts that you've been talking about recently that give some good signals to you. And one of them is the short-term holder realized price chart. Talk us through what you're noticing here as there's been a cross here in this chart.
Yeah, so this is a really interesting metric, and throughout Bitcoin bull markets, it typically acts as almost like a moving average level of support, and vice versa through bear cycles, it usually acts as resistance. Now, what this is actually showing us is the average accumulation price or cost basis for new market participants. Now, we're defining new market participants as those that have been within the market, within the space for 155 days or less. Beyond that, it might not seem like a long time, but beyond that, holders are exceptionally more likely to just be holding for an indefinite period of time. Those short market participants are usually in and out within just a couple of months. So that 155-day figure, that's where that comes from. But as we can see from the chart here, we've recently just reclaimed this line, which is currently about $93,000. And this is usually, if we can come back and retest this, a very solid level of buy pressure and support if Bitcoin can hopefully turn this into a foundational level and a strong structural level of support. But ultimately, this is just a good shift in narrative as well. When we're beneath this, indicates a majority of new market participants are at a loss. Of course, prices beneath their average accumulation price. So just in general, when we're beneath this, you hear this fear in the market, you hear this bearishness, you hear all of these people just saying Bitcoin's worthless, it's terrible. These are the people that bought it 100K. Now, immediately capitulating as soon as we have a little bit of retracement. But now we've regained this, as you can probably tell from social media posts, YouTube videos, etc. There's a little bit more confidence in the market. There's a little bit more bullishness and optimism. And all it takes is just a few $1,000s to the upside to immediately get everyone in a good mood again. But this is, like I said, not only just a good technical level to be crossing, which hopefully we can turn into support, but as again, a good psychological level to again reclaim, to get some more bullishness and optimism back into the market.
Would this say to you, I think the big questions in everyone's mind right now is the short term, what Bitcoin is going to do in the short term. I think there is a lot of consensus around the more medium term, a lot of belief that we're still in a bull cycle and we finish the year higher. From here, the macro side will sort itself out in some way or another. Everything leads to the central banks reprinting more money, which leads to inflation risk and assets go up, Bitcoin leading the way. In the short term, what do you expect to see? Do you think that we could retest some lower levels? Do you think we found support yet?
No, I think we had a huge amount of confluence of support at around that $75,000, if not slightly lower figure. We have the previous all-time high that we set last year around 74K, just post the ETF approval. Alongside that, we have some key support levels. If you look at the cycle master chart, which I think we'll bring up shortly, there's a good, there's a good fair market value level, which again coincided with that support we discussed about. And then from a more technical perspective, if you look at some of the volume ranges, we can see again, there's a lot of buy pressure, a lot of activity just beneath the price. And then just a little bit more immediately from that, we have some key moving averages, such as the 100 and 200 day, etc., all converging at around $90,000. So I do think in the immediate term, we do have a lot of buy pressure beneath current price down to around $90,000. Like I said before, this is also marking the previous range lows that we had after we set that all-time high of $100,000. And if you just zoom out from a macro perspective, if you look on the weekly chart, we are still setting higher lows. So from a technical perspective, even as terrible as it felt to have this big retracement, things still look pretty fine. This is just pretty typical for a Bitcoin bull cycle. So I do think in the short term, we will have a little bit more optimism. We do have reason to be a little bit more optimistic, I should say, to potentially match higher. But like I said, anytime we rally $20,000+ in a very short space of time, it's not surprising if we do have a little bit of a cool off period. I mean, in the past few weeks, I think it was in about a 3-week period, we made up more dollars than we did in the first 10+ years of Bitcoin, where Bitcoin previously, it took, how long did it take to get to $20,000? Was it 2020 the first time it broke? Bitcoin was made in 2010, whereas now in 2 weeks, we've made up $20,000. So that just shows how much the market has grown. And this just feels normal. Like you said, it almost feels an inevitability from the medium to long term to have this huge amount of Bitcoin appreciation. So I think a lot of people maybe get a little bit caught up in the short term thing, when really, if you just take a step back, zoom out, things do look good. We are going to have this choppiness. We are going to have this volatility. And especially now there's a little bit more institutional influence on the market. It's probably going to be a little bit more unpredictable than it typically has been, like we could see in the 2017 and previous cycles when it was mainly retail driven. And we were seeing just people like you and myself who were buying just a few $100s, a few $1,000s. The technical analysis perspective on the charts just looked super clean, super obvious. But now with these institutions coming in, they'll have warehouses full of people and servers just trying to accumulate as much as they can in these complex algorithms and whatnot. So it wouldn't surprise me if we do have slightly more distorted, slightly more obscure volatility within the charts, but ultimately things look good.
When we look at the Bitcoin cycle master chart that we've got up on the screen right now, which is just such a great chart, the way it shows whether we're in undervalued or overvalued territory. Right now, we're right around fair market value. What does that say to you in terms of like which direction we could go next?
I mean, it's pretty typical. If you were to zoom out here and look at the 2017 cycle, for example, this actually looks fairly similar to typical price action we do see during bull cycles. Again, almost like a moving level of support as price rallies higher. Of course, there's going to be times of inevitable retracement. Once we actually come back and retest this fair market value level, like we did in kind of June, July 2017, again, it really shouts that we have some optimism in the market. Bitcoin is finding some buy pressure and support, and hopefully this can set the stage for some more sustained trending price action to the upside. Just for some clarification on what the Cycle Master is actually showing, of course, there's a multitude of different on-chain data, forecasting, pricing models, etc. So the Cycle Master actually tries to collate all of these just to give us a very simple and quick overview into potentially discounted or overvalued prices for Bitcoin. So once we start rallying to this upper red region, this overvalued line, might be a good indication to begin locking in some profits. I know I always get a lot of slack as I'm the one Bitcoin guy in the space that says it's maybe not a bad idea to begin rotating out of Bitcoin. But ultimately, even if you don't want to do that, then maybe just take your foot off the gas in terms of dollar cost averaging into the market and wait for some more favorable risk to reward accumulation areas.
I've got to ask you about that. That's interesting that you think about rotating out of Bitcoin. Explain that strategy to us. Like, when would you do that? What would you rotate out into?
So people hate when I say my plan is to take profit on Bitcoin or rotate out of Bitcoin. The entire purpose
You're allowed to take profit.
The entire purpose of this is to accumulate more Bitcoin. Yeah. You know, the way I see the market is I dollar cost average in, I strategically dollar cost average in when I believe that there's favorable risk to reward, when the market is at a discount and I can get more value for money. But when it's the opposite, when I feel like the market is potentially getting a little bit overvalued, to me, it makes sense. I'm not selling everything. I'm not smashing the sell button and walking away. I'm just selling 1 or 2% here and there when the market starts to get a little bit overheated, with the intention of rebuying, reaccumulating when the market is once again in a more favorable area to accumulate Bitcoin. So when in terms of what I'm rotating into, what I'm rotating out of, it's hard to say right now, but looking at assets like gold, other hard assets, they're not doing so bad right now, matching on to new all-time highs. And if you were to look at the Bitcoin priced in gold ratio, over the past few months, gold has actually been outperforming. So, of course, there's periods of time where you need to be just a little bit aware of capital efficiency and at times realize that there may be opportunity in other assets. This isn't me saying that, you know, again, I'm not going to sell Bitcoin, never come back to it. But, you know, if you can buy a roof over your head, if you can buy a nice bar of gold or maybe a nice new Lamborghini, whatever it is that you want, then there's times to do that. There's times when it makes sense to do that.
I look forward to the day that I see you ripping a Lamborghini around York. That's a sight that I'd like to see. Okay, let's take a look at the. We talked about the short-term holder. What's going on there? Let's look at long-term holder supply. What's happening on the long-term holder side? Because this is telling an interesting story as well.
Yeah, for sure. So this is slightly misunderstood, I feel, sometimes. A lot of people look at this chart and immediately think that this indicates that long-term holders are accumulating more Bitcoin, which isn't actually the case. This is actually showing us that the accumulation from short-term holders has slowed down to the point where the amount of BTC being held by long-term holders is actually increasing. So it doesn't necessarily mean that long-term holders are selling as much as what it's telling us. What we can see is the long-term holder supply is increasing, whereas if we look to a few months ago, it was very rapidly decreasing, which did indicate that a lot of these long-term holders were moving their Bitcoin potentially to exchanges to sell and take some profit on their positions. So once we actually see this decreasing, this is just supply and demand economics in action. Once we see the supply increasing, if demand can't catch up, then price is going to struggle as well. So once we actually see on the flip side, once we see the amount of supply readily available on the market begin to decrease because the long-term holders are continuing to hold onto their Bitcoin, not wanting to take any profit in anticipation of higher prices, we only need demand to stay constant or ideally increase. And like we've seen over the past few weeks, this is reflected in the price action when we have this big run up in price. So I think this is a very promising sign to see, just showing that long-term holders are sitting on their hands, they are sitting on their Bitcoin and thinking, if I zoom out and look and think of the potential of how high Bitcoin could go in the coming months and years, do I really want to be selling at $70,000, $80,000, $90,000? And for a lot of them, no. Of course, when we rallied above $100,000, that was almost 100% gain in just a matter of months from about that 50K level. So if you were holding Bitcoin from just a few dollars, you can lock in, you can buy that Lamborghini. But now we're actually seeing the opposite. We're seeing people optimistic for the future, which is, again, a very promising sign for Bitcoin.
Let's talk about what's happening with ETFs and investor sentiment, because sentiment is such a big part of what impacts Bitcoin, particularly in current macro markets where sentiment gets thrown for a total whack and fear controls all and uncertainty runs rampant. When you think about investor sentiment right now, what are you noticing? And then let's chat about the ETF flows as well.
One thing, especially looking at the sentiment in ETFs and more institutional investments in Bitcoin, is it's actually very positive. If you look at something like the Fear and Greed Index, or you don't even have to go that technically, if you just look on social media for a few weeks or months ago, everything felt terrible. It was like the depths of a bear market. Everyone was saying Bitcoin was going to zero. But like I said earlier, Bitcoin was actually holding up incredibly well versus a lot of the more safe haven assets, and especially even more speculative assets like, tech stocks. Bitcoin was holding up a lot better than them, which for an asset which has, a fairly relatively small market cap in the grand scheme of things is really optimistic and positive to see. And what we could see looking at the ETF inflows and outflows, even though we did see some outflows, the amount of inflows we've seen since we've had that drawdown period is absolutely massive. We've seen billions and billions of dollars immediately flowing back into the Bitcoin ETFs as soon as we had a first sign of resurgence. Now, again, this just really reiterates the bullish sentiment that we're seeing from these institutional investors. And not only from a sentiment perspective, but again, just from a market dynamic, supply and demand economics perspective. If we're seeing billions and billions of dollars flowing into the market, if we're seeing Michael Saylor pressing the buy button and buying tens of thousands of BTC every week, these might be Bitcoin we never see again. Now, of course, there may be outflows, but are these outflows in the sense that this Bitcoin is going to leave the Coinbase custodian back onto the open market? Maybe, maybe not. Maybe they're just going to be circulating in this dark pool on Coinbase for them to easily accumulate again at more favorable prices. So again, these are Bitcoin that may not be available to us ever again. And just from a supply and demand perspective, as soon as the amount of supply that's available for more and more people to buy dries up, then it just gives us this opportunity for a supply shock, a big squeeze to the upside. So very promising to see that immediately as soon as we had a rebound in the Bitcoin price action, everyone was piling in and felt this FOMO to actually get BTC before the train actually left the station.
I want to double click on you mentioning the correlation to the S&P 500 and what's happening with Bitcoin versus US stocks and the US equities, which it is very much correlated to really since COVID very closely. And there's always this question of like, is it decoupling and is this finally happening? And who are the buyers and for what purpose are they buying Bitcoin? Are they buying it like a gold or are they buying it like a risk asset? So I want to talk about all of that. But before we do, we just need to take a quick moment to hear from our sponsors who make this show possible. It should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn. Yes, USDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. All right, we're back. I want to remind everybody we do a Q&A at the end. So if you have any questions for Matt, throw them in the chat on YouTube or X. Matt, let's talk a little bit about the correlation between the S&P 500 and Bitcoin. What's your take on this right now? Is Bitcoin fully decoupling? Is this just another, we're all saying it, but it's not really there yet?
Listen, I would love to say Bitcoin is currently decoupling. We're going to have this period of massive outperformance regardless of what happens in US equities. But honestly, the data just isn't there to support that right now. Like you can see from the chart, the correlation to the S&P 500 is still incredibly strong. And realistically, it's likely going to be until Bitcoin becomes this multi-trillion dollar asset comparable to gold, where maybe it can act as a hedge against inflation and economic uncertainty. But realistically, if you're a more traditional investor, speculative pension fund manager or something, and you see a bit of a downturn in the market, what's the first thing you're likely going to be offloading? It's the volatile asset that can drop 50, 60, 70%. So it makes sense. It's not great to see. Obviously, we'd love to see Bitcoin going up regardless of what's happening elsewhere. But especially looking at something like gold, where we still don't have that prolonged period of strong correlation to gold, even though, of course, there's this narrative of Bitcoin being a digital gold. Right now, we still are acting as a more speculative, almost beta play of US equities, which I do think one day we will get away from. But ultimately, right now, it still is the case. That's why I do think if we do have a long, drawn-out bear cycle in equities or a big global recession or something, Bitcoin's upside potential is definitely going to be limited to some extent, regardless of how much buying we see from institutions, Sailor, ETFs, etc. Realistically, it is going to be the thing that a lot of people are looking to offload in periods of uncertainty.
Okay, two more charts I want to talk about are BTC Dixie and then BTC Global M2. And then we'll get into your predictions for where Bitcoin will go for the rest of this cycle. And then let's talk about MicroStrategy. Let's look at BTC Dixie. I mean, the Dixie's just been on a historic decline recently. What stands out to you when you look at this chart?
Yeah, well, it's great to see, to be honest. A lot of people, even myself, have been talking about the supply and demand economics of Bitcoin, but an often overlooked aspect of the Bitcoin price appreciation or depreciation is the supply and demand economics of what we actually measure, what we actually value Bitcoin in, and that's typically the US dollar or the fiat currencies. So what we've seen in the US dollar strength index, the DXY, recently is a huge decline in this, which indicates that, well, typically it would have indicated that Bitcoin would be in a period of favorable price appreciation. As we can see from the chart, they have almost a perfect inverse correlation when the US dollar strength is decreasing. People don't want to lose their purchasing power due to inflation. They're looking for somewhere where they can actually gain a little bit of appreciation on their assets. So people look to equities, then potentially capital flows down into more speculative assets like Bitcoin. And this is where we usually see Bitcoin really excel. But recently, we actually saw a little bit of a divergence in this. It actually took a little bit of time to catch up. Now, this is typically, well, likely due to the economic uncertainty we've had specifically around the US tariffs. But ultimately, now we have actually seen a positive rebound in the Bitcoin price action. And from a technical perspective, looking at the US dollar strength index chart, that DXY, we have actually broken down a key level of support, which we can hopefully now retest into resistance. If you can just look at the range we've set over the past kind of 5 years, you can see we usually bounce from this lower region in the US dollar strength index, but now we've dipped beneath that. So hopefully this can be the start of a more sustained downtrend in the US dollar strength. And just from a more macroeconomic technical perspective, I guess, a weak currency is actually pretty good for economies. President Trump might actually be doing this purposefully just to try and drive more economic activity, which makes sense. So if that continues to happen and we can kind of stimulate the US economy in that regard, then again, Bitcoin's likely going to have a positive reaction to that.
Yeah, definitely favorable setup for Bitcoin with where the Dixie is right now. And as you said, probably the best thing for the US and the best thing for the world. It really allows the world to have a better setup when the US dollar isn't dominating as it has been for the past few years. Let's look at liquidity, global M2. You know, the tide that raises all boats is global M2. Everybody always wants to know, when are we going to see more money printed? What's your thoughts on M2 money supply and where it's headed in the future and how that will play out for Bitcoin?
Yeah, so as we can see on the global M2 money supply, we have seen this big expansion in lots of global balance sheets. We've seen the money printers going And typically this has had a big positive impact on the Bitcoin price action. Now, it's something that a lot of people have been discussing, including ourselves, is a potential lag on this data, where we don't see an immediate positive reaction to the Bitcoin price following a big expansion in global M2 liquidity. There's somewhere between an 8 and 12 week lag where liquidity increases before Bitcoin has this big appreciation. Now, the number itself, the exact amount of days or weeks, isn't that important. It's changing every single day, the exact highest amount of correlation. But what we really need to focus on is the fact that this is very much in a macro uptrend. And even though Bitcoin has been struggling recently due to the uncertainty, the fact that we have more and more dry powder on the sidelines waiting to be invested in assets like Bitcoin is very promising to see. And another thing, Bitcoin isn't just an asset solely based in the US. We are taking into account here the Chinese economy, the Russian economy, the British, the European, every economy, because all of these people are looking for a way to get out of the, poverty train, to try and gain some returns on their assets, try and avoid inflation. So where do they look to when their currency is being devalued and losing purchasing power? They look to assets like stocks, they look to assets like gold, and they look to assets like Bitcoin. So now we are actually seeing a positive reaction in the Bitcoin price following this big expansion. And what we can see is the trend is very much to the upside, and it wouldn't surprise me at all in the coming months to see a change in the current sentiment from US politicians and policymakers to once again resume quantitative easing in the US, which would really add some fuel to the fire.
Yeah, I think that's the big question that we'll all be watching is what is the Fed doing today? We've got their FOMC meeting. We'll see what comes out of that. Are they going to cut rates? Are they going to start QE? I don't have that expectation today, but in the next few months, they meet again in June, they meet again in July. I think we're going to get hopefully some more clear monetary policy from them. Right now, there's been a lot of we're sitting on the sidelines and waiting, which leads to more uncertainty, especially on the global M2 and the liquidity level. But I just, as you said, when you look around the world, you've got Europe that's going to increase military spending in a big way and is really never in a position to decrease the amount of government spending that they have. You've got China in a position where they absolutely basically need to print money. And now that the Dixie is lower, they finally could be in a position to do that, although the trade war is making that quite complex right now. And then the US has got $9 trillion in debt that it needs to refinance this year. So, all roads lead to the same end outcome. Let's talk about your predictions. Where are you thinking right now for you smiling because you love this question so much? Timing and price. Where do you think we go in this cycle, and when do you think we see cycle peak?
So as always, it's much better to react than try and predict. I'm going to give some prediction there, but realistically, if the data all points towards one thing, whether it's at 110K or 310K, I'll be taking action. I'm going to be reacting to the data. But right now, just looking at the data we currently have available, I'll give a cautious baseline and a more optimistic target. So I think somewhere between $140,000 and $160,000 would be my more cautious target, my realistic baseline expectation for this cycle. As much as everyone says the top is in, as much as everyone's starting to feel like this could be the start of a bear cycle, realistically, the data just does not support that yet. From a macroeconomic, from a technical, from an on-chain, from a derivative looking perspective, everything is looking positive for more price appreciation over the coming weeks and months. Of course, that can change on a dime. We can get some uncertainty. We could get World War III. Who knows what we'll get? COVID-20. Who knows? But ultimately, for me, things look pretty good. Now, as a more optimistic target, I think I'd be looking to $200,000 to kind of $210,000 to $220,000. Now, again, this is changing. If we start getting up to higher and higher prices and long-term holders, big whales, aren't beginning to take profit like we'd maybe anticipate them to, move those targets up. And of course, we need to look back to 2017 when price rallied past $10,000 for the first time. Everyone thought, wow, we must be nearing a top. We're in five-figure territory. A lot of the signals were starting to show we're a little bit overheated. And in about 2 weeks' time, price doubled. So things can get crazy pretty quickly. We could hit $120,000, $130,000, and maybe we're starting to think we're getting close to a top. And you blink and it's $250,000. In terms of timing, if we were to look at the previous two cycles, that put us somewhere around October, September, potentially for a peak if we're to follow those exactly. But given the fact that the market cap of Bitcoin has just continued to rise, I'd expect kind of slightly lengthening cycles, especially now that we're seeing the halving event have a less and less impact. We're about 94% of the circulating supply. of all Bitcoin that will ever exist, already in the circulating supply. So I think the halving events are having a lessened and lessened impact on the actual 4-year cycle we've typically seen on Bitcoin. So somewhere around maybe Q4 2025, Q1 2026 for a peak potentially. But as I said, this can all change. If we have a Bitcoin strategic reserve, all bets are off. Who knows what happens if Trump decides to buy 1 million Bitcoin and trillions of dollars are flowing in, and suddenly it's an institutional and national game of FOMO, where everyone doesn't want to be the last person that didn't put 1, 2, 5% of their portfolio into Bitcoin, the best appreciating asset of all time.
Yeah, we'll see what happens. July 23rd is the deadline for the crypto council to submit their report to the president as part of his executive order that he put out when he first took office, as to what they think, how they think they could structure the strategic Bitcoin reserve, how they think they could do it. Right now, it's all these budget neutral ways of acquiring Bitcoin, but maybe there's something else that comes out in this report. So we'll see. Yeah, it's definitely Matt. I love how you are so conservative with your estimates. It is very much appreciated. We get so many guests on this show that love to throw out like perma bull numbers, which are exciting. And look, I love to say $1 million Bitcoin, and I think we can. I believe, and I'm sure you believe this too, that we can all anchor off $1 million Bitcoin in the future. Assuming that we hit $1 million Bitcoin in this cycle feels a little bit like a bit of a pipe dream, because that would essentially mean we would be somewhere around the same market cap as gold, which would be incredible for us to do that this quickly. I think we all believe we'll be at the same market cap of gold and even beyond the market cap of gold in the future, but don't know that unless, as you said, unless maybe the US announces they're going to buy 1 million Bitcoin, and then I'd throw all your predictions out. Who knows what happens then? I guess that is a good point, is none of these predictions, when you and I and a lot of the analysts in the space make predictions, we tend not to make them based upon these events, which are totally out of our control and just more hope. Whereas when a lot of the permabulls make the predictions, they make them based upon these events and assuming that they are going to happen. Let's talk about strategy. Or MicroStrategy. We haven't talked a ton about that on the show. They had their earnings last week. You've been chatting a little bit about this. What are your thoughts on strategy?
I'm very bullish on strategy. I really am. I mean, you can't be bullish on Bitcoin without being bullish on strategy. Now, we will put a caveat out there. Everyone calls Michael Saylor a genius when Bitcoin's soaring to the upside. We'll have this conversation at the tail end of the next bear market and see how much of a genius everyone's calling him. I do think he is great and he's doing a lot of good stuff for the space, but leverage and volatility works both ways. Any company which is buying hundreds of thousands of Bitcoin, for realistically a company with, I won't say a failing business underlying, but I mean, it's a drop in the ocean compared to this Bitcoin accumulation. How much did they make? $a few $100 million, and they're holding tens of billions in Bitcoin. At this point, just shut the business down, really.
It's true.
Yeah, it's true. It's awful to say. But ultimately, I'm very bullish on strategy. I do own a small portion of it, and I do think it will continue to outperform, especially given how aggressively Saylor and strategy are continuing to accumulate Bitcoin. We can see they already own 555,000 BTC. And if we are seeing tens of billions more inflowing into the market, where they've already got Strike and Strife, and I'm sure they've got lots of other crazy products and derivatives that they're planning on releasing in the near future to, again, raise more capital with the goal of accumulating more and more Bitcoin. So again, this kind of comes down to, if we're talking about price predictions of how high strategy could go this cycle, kind of depends entirely on what Bitcoin does. So I do have a rough calculator here. So what we can do is just look at the net asset value premium to Bitcoin. So if you just scroll down on the page you're currently on, what we can see is basically how much of an overvaluation the share price is in relation to how much underlying Bitcoin they currently have on their treasury. So it's the premium to Bitcoin NAV ratio. So currently it's somewhere around a 2. So looking at the market cap of strategy, taking into account the amount of Bitcoin they have. But sometimes we reach values of 3 or 3.4, even higher potentially. So what we can do is, just assuming a continued rate of accumulation throughout the rest of 2025, they'll have somewhere between 700 and 800,000 Bitcoin. This changes, of course, if he starts putting tens of billions in, we start talking about 1 million Bitcoin. But assuming then just a we'll go with my conservative target-ish range. I said 140 to 160. We'll go right down the middle. If we do see $150,000 Bitcoin and Saylor has somewhere between 800 and 700,000 BTC, then a premium to Bitcoin NAV ratio of 2.5 to 3, we get price targets of $1,200 to about $1,700 for strategy. Which, just looking at that, and given the fact that the share price is currently around $400, that is a huge upside return and the asymmetric bet, I think, that we haven't seen from a product in a long time. Of course, Bitcoin will still do exceptionally well, but we're talking about a 60% increase in the Bitcoin price for a multiple hundreds of percent increase in the strategy price. So something I'm very bullish on. It doesn't make up a large portion of my portfolio because, of course, if Bitcoin goes down 50%, then expect strategy to go down 60, 70, 80% in the bear cycle. I do think it's incredibly interesting. I think a lot of people trying to evaluate strategy based on traditional means, traditional fundamental analysis, are kind of missing the point here, because it's not like any other company. It's not like any other asset we've seen. It's like when Bitcoin was first on the block and people were trying to rationally model how much Bitcoin should be valued at. When how do you really model something that hasn't really ever existed before? So very exciting to see. And I won't say I'm an expert on strategy or anything like that, but I am aware that in the next few months, they do have a slightly different method of calculating their earnings in which they could include their Bitcoin earnings, the Bitcoin valuation of their treasury holdings as earnings. At which point, if they suddenly start posting earnings of tens of thousands of percent above expectations, because historically they've actually been beneath expectations quite a lot of the time, like they were at the start of the month, then suddenly everyone starts looking at strategy and thinking, wow, that's crazy. We might need to look at doing the same. And this is where we get the sentiment shift from institutions to think, if you're a company with a treasury and you're holding bonds, potentially some equities, and you're seeing strategy posting hundreds of or thousands of percent returns, would you not put 1, 2, 5, 10% of your portfolio, your treasury holdings into Bitcoin? How do you look at the shareholder meetings when every other company is making billions and billions of dollars because of their Bitcoin holdings, and you're the one that was a little bit too conservative? So I think it would be quickly and then slowly and then very quickly, but really things could snowball. And again, this is where we start getting into speculative territory, where what company is going to be buying tens of billions of Bitcoin next. But ultimately, I just think it's a very interesting thing to watch and something I'm very bullish on going forward.
What's your thoughts on Jack Mallers' new business, and what's it called? 21 Capital?
XXI, yeah, 21. Yeah. I think it's interesting. And I think a lot of people are looking at that and thinking, wow, is strategy now in doubt? Is there now potentially no reason to be purchasing this? Should we be looking at other Bitcoin treasury and accumulation companies? But ultimately, I think a rising tide lifts all boats. If they start buying tens, if not hundreds of thousands of Bitcoin, again, this is Bitcoin that we might never, ever see again. This helps everyone. This increases the likelihood of some more sustained positive price action to the upside from a supply and demand economic perspective, because the amount of Bitcoin that people can actually buy radically decreases. So we just need demand to stay the same. In terms of which one do I think will do better or worse, who knows? Of course, Mallers, he's a great guy. I met him at Bitcoin Amsterdam and talked to him a lot about this type of stuff. And he is a genius in the space. I'm sure he's going to come up with some amazing products and strategies to accumulate as much BTC as possible, especially with the backing of USDT and is it SoftBank as well. So very interesting to watch and something I'm definitely going to be looking closely to. But I don't think this takes away from strategy. If anything, I think it reaffirms what Michael Saylor is doing and how positive it is for the space.
Have they announced actual plans to buy and said how much they're going to buy or how much they're going to raise, or is it all just speculation at this point?
As far as I'm aware, it's just speculation. I don't have any fixed numbers in my head, but I'm sure in the coming days and weeks we'll learn a little bit more about that.
I'm sure we'll learn it more soon. Okay, let's go to Q&A before we wrap here. We got a few questions from the chat. If anybody listening has more questions, feel free to throw them in. We can take one more question. First up, somebody asking about Bitcoin dominance. Let me pull up the Bitcoin dominance chart right now. So Bitcoin dominance currently sitting, where are we at today? We're at 60%, 61%. We're pretty high on Bitcoin dominance. What are your thoughts on Bitcoin dominance within this cycle? In past cycles, we have seen an altcoin season and we've seen Bitcoin dominance drop. Is that same thing going to happen here? What are your thoughts on when you look at this?
So I do think at some point we'll have an alt season. Just because I work for Bitcoin Magazine Pro, I'm not a full Bitcoin maxi. I can appreciate that some coins do outperform in some periods. But ultimately, we saw the ETF approval. We saw these big companies accumulating BTC. They're not looking at whatever Trump fat coin you've got in your portfolio. That's just the reality of it. Ultimately, we need to wait until the capital rotates into these more speculative assets. And right now, times of economic uncertainty, they just aren't that. We see in traditional markets where money flows from fiat coin, well, not fiat coins, fiat money, just US dollars, for example. Then it flows into bonds, and then it flows into gold, and then it flows into these big safe stocks in the Dow Jones, and then it flows more and more into tech stocks. And then we see this almost distribution of capital and rotation as it trickles down into more and more speculative plays. And the same thing happens in the crypto market. If everyone's talking about a bear cycle, not just for Bitcoin, but pretty much everything, because every crypto is pretty much 95% correlated to Bitcoin, do you think people are wanting to rotate their capital into assets that are even more volatile, that will go down even more during a bear cycle? Probably not. What we're going to see is Bitcoin is going to have this big rally, capital is going to flow in. And once Bitcoin starts slowing down to the upside, people start getting a little bit greedy. People start thinking, hey, this coin could be the next Bitcoin. We get these big narrative shifts and everyone's looking for the next great 100xer. That's when we start seeing capital shift into altcoins like Ethereum and Solana, and then into more and more speculative. We get into the Cardanos, the Ripples, and then from there we get into whatever AI coins are coming out these days. So I do think at some point we are going to have a alt season, if you like, but typically they only last a few weeks, if not a month or two, after multiple years of underperforming Bitcoin. So it's one of these where if you can do it, fine. But to be honest, I think the odds are really stacked against you of outperforming BTC. And I think it's a lot of reason why this cycle in particular has felt kind of underwhelming if you just look at it from a social media perspective. Bitcoin has gone from $15,000 to well over $100,000, yet people didn't feel great. Why is that? A lot of them were probably overexposed to coins that didn't even nearly recover a half of what they lost during the previous bear cycle. So if you want to go for them, fine. But ultimately, to me, I think Bitcoin's going to continue rallying. I think in the next 10, 20 years, we're going to see Bitcoin dominance at 90+%, and I think all else will fail. You have to remember, Bitcoin is evolving. It's a piece of software. If a radical new improvement or update or technological idea comes out on an altcoin, inevitably, if it's great, it'll get absorbed and adopted and implemented on the Bitcoin network. This isn't some static thing like gold, which can never change. Bitcoin's constantly improving and updating, which to me kind of negates the necessity, especially as we get other layer 2 solutions like the Lightning Network, etc., and we get DeFi built on top of Bitcoin. It kind of reduces the need for these altcoins. They become more of a test net for what could be eventually adopted on the main Bitcoin network.
In past cycles, Bitcoin, I'm not going to go down the, I kind of want to debate you right now about smart contract platforms versus Bitcoin.
Okay.
Let's save that for another day, because we're almost at the end of the episode. We're already a little bit over time. So I mean, we'll do that one again at some point, Matt. In past cycles, Bitcoin dominance has dropped into like low mid 30s. Do you expect that to happen again?
Let me quickly get at the Bitcoin dominance chart myself. So what I like to do is, you also have to keep in mind that a huge amount of the other dominance, so dominance that isn't Bitcoin, is being more and more made up by stable coins. If you look at the dominance of stable coins like Tether and USDC, it's actually slightly warping this metric. I actually think the Bitcoin dominance in terms of dominance compared to other cryptos is significantly higher than the 65% it currently is. In terms of how low do I think it would go this cycle, I would be surprised if it reached as low as 40%, to be honest. I think I'd be looking for somewhere optimistically around the 47% as I look at the chart now, but realistically somewhere around the 53, 52% as how low Bitcoin dominance can go. It is just on a tear, and you have to keep in mind, Bitcoin dominance increases most aggressively towards Bitcoin's tail end of bull cycles when it's rallying massively and exponentially to the upside. So if you think Bitcoin dominance is high now but not going to climb any higher as Bitcoin starts really rallying, I think you're wrong there. I think Bitcoin dominance could climb as high as 73%, just looking at the chart now. And that's just this cycle. I think ultimately it's trending very much towards 90, if not plus, towards 100%.
Okay, last question. 100%. Wow. Okay, we got to have that debate at some point. But let's A good question about the options market for Bitcoin. I'm not an options trader. Do you follow the options market for Bitcoin?
So it's something I take into account, especially when we get towards like the end of quarters and we have almost like a max pain price. Typically, the market punishes a majority of participants as often as it can. And as well as that, just from a reason why people do that, that's where a lot of liquidity lies and a lot of pain in terms of fiscal monetary pain and reward for those that can actually play the other side of that bet. So it is something I take into account as we get towards these big options expiries. And alongside that, taking into account the implied volatility of the market. Just try and track. Bitcoin typically goes in these phases of massive expansion, contraction, and we get these big wedges of price just coiling in, and we see implied volatility start climbing up, and then we have these big explosive moves, and it's cyclical. Just like the price is cyclical, we get these periods of expansion and trending price action and mean reversion and contraction. So it's not something that I'm an expert on. Here in the UK, we don't really have the availability to trade many options, but it is something I do keep an eye on. And as well, when I say that I'm going to be selling Bitcoin, taking some profit on Bitcoin, if you're pretty clued up in the options market and you can just hedge against any downside price action by just placing some puts, whatever you can do, if you can take some loans against your Bitcoin, whatever works for you, you can do it in a more tax efficient way than selling. You can actually take loans out against your holdings. If you can use the options market to do that, then great. It's definitely something I'm going to be looking into as we get closer and closer towards the bull cycle peak. But for now, it's not really something I'd say I'm an expert on.
Matt, thank you as always for your time. Truly appreciate it. Thanks for joining us today.
Of course, always a pleasure. And I'm very much looking forward to coming back and having maybe a little bit more of a debate next time. I'm curious to hear your thoughts on smart contracts and altcoins and everything else anti-Bitcoin.
Here's my first quick take for you. We need to stop using the word altcoins and actually segment the various categories within altcoins to truly understand them, so that we can actually have this debate, because I don't want to debate you on like every single freaking altcoin out there. I agree with you. Most of them are trash, and most of them you should invest in Bitcoin. And Bitcoin is certainly the best risk reward asset within crypto beyond a shadow of doubt. And quite honestly, most investors probably should just buy Bitcoin and shouldn't go into other altcoins, because as you said, when they pump, it's short and it's quick. And if you're not tuned in and paying attention every day, then you can miss it and you can round trip altcoins so badly. And I think there's a lot of people who have done that, and a lot of people who haven't had the success in crypto. You look up on the outside, you're like, oh yeah, it's so easy to make money crypto, but you're like, why am I not? I just keep round tripping. Anyways, we got to wrap up the episode because I'm already going into it. You got me, Matt. You got me. Before I let everybody go, I quickly got to tell you guys that none of this is financial advice. This show is for information and entertainment purposes only. Investing in crypto, Bitcoin, altcoins, any asset is risky, and you should only invest what you are prepared to lose. Before I let you go, I got to tell you guys quickly about one of our favorite exchanges, which is OKX. We've partnered with OKX, where right now, if you sign up or if you do any of your trading on OKX exchange and you hit the link in the show notes, you could get an opportunity to win $60,000 USDT. It'd be nice to get a little bit of 60K. You could buy half a Bitcoin, maybe not, a little bit more than half a Bitcoin right now. But check it out. If you want to buy, if you want to sell, check out OKX today. Thanks so much for tuning in, everybody. Have yourself a wicked awesome day. We'll see you back again tomorrow.